Attention electric vehicle enthusiasts and growth-oriented investors. Buckle up, because we're diving deep into the world of NIO. NIO. A leading Chinese electric vehicle manufacturer. Today, on Stocks Telegraph, we'll be dissecting NIO's potential in 2024, exploring the bullish signs fueling investor optimism and the potential risks to consider before taking the wheel. Is NIO destined for a record-breaking year, or are there hidden roadblocks on the horizon? Let's shift gears and analyze the factors shaping NIO's future. The electric vehicle revolution is gaining momentum, and China is at the forefront of this transformative movement. One company leading the charge is NIO, a pioneering manufacturer of premium electric vehicles. NIO has captured the imagination of investors worldwide, but with a stock price that's seen significant fluctuations, many are wondering, is 2024 the year NIO finally hits the gas and delivers exceptional returns? In the next part of the video, we'll explore NIO's recent financial performance and some key bullish signs that have investors excited. Stay tuned to see if NIO can navigate the road ahead and emerge as a leader in the global EV market. Before we delve into the numbers, we want to hear from you. Leave a comment below and tell us your thoughts on the future of electric vehicles. Do you believe Chinese EV manufacturers like NIO are positioned for significant growth? Now, let's shift gears and explore NIO's recent financials to see if they justify the investor enthusiasm surrounding the company. Let's start with the current price of $4.72. While not at its 52-week high, the analyst's mean target price of $6.79 suggests a potential upside of over 43%. This significant difference indicates that analysts see considerable growth potential in NIO. This optimism is further fueled by impressive historical performance. Over the past 5 years, NIO has demonstrated a remarkable annual EPS growth rate of 30.22% and an even more impressive annual sales growth rate of 67.02%. These figures paint a picture of a company experiencing consistent and significant growth, a major plus for investors seeking companies positioned for long-term success. Looking ahead, analysts anticipate this growth trajectory to continue. Next year's EPS is projected to grow by 26.17%. Indicating that NIO is poised to maintain its strong financial performance. This consistent growth potential is certainly a bullish sign for investors considering NIO for their portfolios. NIO's financial performance and analyst expectations paint a compelling picture for investors seeking growth in the electric vehicle sector. While NIO's financial performance and analyst expectations are encouraging, there are certain challenges to consider. One key factor is competition. The electric vehicle market is rapidly growing, with established giants like Tesla and emerging players all vying for market share. NIO will need to effectively differentiate themselves in this crowded landscape to maintain their growth trajectory. One way NIO is addressing competition is by strategically targeting new market segments. Recently, NIO executives announced their commitment to introducing more moderately priced vehicles in 2024. Specifically, CEO William Li highlighted plans for an SUV that will undercut Tesla's Model Y in terms of price. This strategic move positions NIO to attract a wider range of consumers, potentially boosting their sales figures. Additionally, Li mentioned the upcoming launch of a more family-oriented model scheduled for the latter half of 2024. Expanding their product portfolio to cater to diverse customer needs demonstrates NIO's proactive approach to navigating the competitive landscape. NIO's strategic product development and commitment to affordability are positive steps towards mitigating competition. We've discussed the competitive landscape NIO faces, but there's more to the story. We're analyzing recent delivery figures, revenue growth, and potential external risks to help you decide if NIO is a worthy investment for your portfolio. So, is NIO destined for smooth sailing, or are there choppy waters ahead? While NIO's delivery numbers are impressive, with a 31% increase in vehicle deliveries from 2022 to 2023, their revenue growth paints a different picture. In 2023, revenue only grew by 13%, a significant lag compared to delivery figures. This discrepancy can be attributed to the fierce price war unfolding in the Chinese EV market. To stay competitive, NIO was forced to slash prices, impacting their overall revenue growth. The price war also negatively impacted NIO's vehicle margin, which shrunk from 13.7% in 2022 to 9.5% in 2023. Furthermore, their net loss widened from 14.4 billion yuan to 20.7 billion yuan. These factors, coupled with their continued investment in expanding their battery swapping network, contributed to NIO's stock price falling more than 30% below its IPO price. Despite these challenges, analysts remain cautiously optimistic about NIO's future. For 2024, they project an 18% increase in revenue, reaching 65.8 billion yuan. Additionally, they anticipate a narrowing of net losses to 16.2 billion yuan. These projections offer a glimmer of hope for investors. However, external factors like global supply chain disruptions and fluctuating battery material costs can significantly impact NIO's operations and profitability. Their high debt-to-equity ratio of 3.4 might limit their ability to raise additional capital in the future. One positive factor is NIO's healthy cash reserve of 57.3 billion yuan at the end of 2023. This financial cushion provides them with some breathing room to navigate potential challenges. NIO remains a speculative investment, but its current valuation of less than 1 times this year's sales suggests potential for significant growth if positive news arises regarding the Chinese EV market. The decision to invest ultimately rests with you. We encourage you to weigh the bullish signs against the potential risks before making a choice. In conclusion, NIO presents a compelling case for growth-oriented investors seeking exposure to the Chinese electric vehicle market. Their impressive delivery growth, strategic product development, and healthy cash reserves are positive indicators. However, shrinking margins, mounting losses, and external risks pose challenges that shouldn't be ignored. Conduct thorough research, understand your risk tolerance, and consider your overall investment goals before adding NIO to your portfolio. This analysis of NIO is for informational purposes only and should not be considered financial advice. We encourage you to conduct your own due diligence before making any investment decisions. If you enjoyed this video, don't forget to like and subscribe to Stocks Telegraph for more in-depth stock analysis. Leave a comment below with your thoughts on NIO's future and the potential impact of the Chinese EV market. Until next time, happy investing.